Hey everyone, and I am going to go through problem, the comprehensive problem for chapter 5, and you can follow along with me. Okay, so as I open this up, we're going to look at problem 5-2B. Now, John Fuji received his W-2 from his employer. He's got income on a W-2 and a 1099. And in accordance with the January 2016 divorce decree, John receives $475 per month of alimony from his ex-wife. And then we have information about him selling a home and then various itemized deductions, day trading. So various things here that we are going to input into a tax return, and some of the stuff that we're not going to input into the tax return. So what we'll do is we'll start with his W-2. Now, this W-2 that we will input onto the 1040. So the first thing we'll do is on the 1040 here, we see that John, his information is already in here. We'll want to show single in the filing status. He did not show any digital assets. Can anyone claim him as a dependent? No, they cannot. And he is not blind, or he isn't over a certain age because he was born in the 80s for a larger dependency credit. So we have to put that information in. Now, the first thing we'll do is look at his W-2. It does show he has income of $83,300, federal taxes withheld of $11,000, and he's a Washington State resident. So 83,300, we'll put that on his 1040, 83,300. And as far as his federal withholding goes, we will show federal income tax withheld from his W-2, and that was 11,000. So we'll go back here and show 11,000 of federal income tax that was withheld. Okay. Now, in terms of his 1099 dividend, it shows us his ordinary dividends, and they are qualified, are $4,850. So that's something we would put on a Schedule B, and we'll show this $4,850 on the bottom portion of the Schedule B, $4,850. And this, again, with software, this would all flow back, but at least for now, we're going to show it here. And then this will end up flowing back to his Form 1040, where we show the $4,850 in dividends, and those are qualified dividends. Okay. Now, he also showed in here that he had capital gain distributions from this mutual fund of $1,350. That portion will go on Schedule D. The $1,350, we will open this up here. Capital gain distributions. Oh my gosh, I can't even remember it in 1 second here. 1350. Sorry about that, guys. So the 1350 will go right here. And this is where the capital gain distributions from mutual funds will flow in. Okay. Then we show, let me go back to the instructions. He is receiving right now $475 a month for alimony. So we will put in 4,750 plus 900. So 5,675. And we will go to Schedule 1 and find alimony, 5,675. Hopefully 4,007, that should be right. Date of original divorce or separation agreement. I'm sorry, I cannot remember what it said. 2016 divorce, 573796075. Oh, I guess we don't need the alimony, but 16 is where the divorce will be in here. Okay. Now, as we go back to more information here, he sold his primary residence after living there since October 2014. John received the Form 1099-S from the sale. John paid selling expenses of $35,800. His basis in the home was $292,000. So what we'll want to do is go and show that information on the Schedule D. Oh, let's look at the form, the 1099-S form here. So you see here, he sold the home on December 31st, 2014, and he sold it for $595,033. So just so I do not give any bad advice here as I'm fumbling, let me go to the Schedule D here and show you where we'll put this information. For the sale of home, which we will show, those are short-term transactions. It will be here, the sale of the primary residence. We will show that on a Schedule D, long-term. We show it was acquired October 1st of 2014. We sold it on December 30th, 2024. And we will show the amount it was sold for was $595,033. Now, where I'm getting that information is right here, $595,033. It also told us in the instructions that he had selling expenses of $35,800 and that his basis in the home was $292,000. Okay, so you can see here we show the basis in the home is $292,000, and we will show that we had selling expenses again of $35,800. So that $35,800 will be an adjustment to selling expenses. I am sitting here seeing what is this code from instructions EH must show adjustments to any gain. 285, 292. 580, 285, 833. Basically, what the adjustments are is when you're single, you're allowed to exclude up to $250,000 of a gain if you've lived in your home for over 2 years. Plus, you'll be able to take those closing costs. So I believe this 285, 833 should include those two numbers, the $250,000 gain plus the closing costs. And ultimately, he will have a long-term capital gain of $17,200 for selling his home. Okay, so we've got that there. Then his basis in the home, he paid property taxes on the home for the second half of $6,000. The closing statement for the sale indicated the buyer needed to reimburse John for property taxes of $33, which were reflected as an increase in John's proceeds. So basically, that $33 will be reduced by his property taxes on his itemized deductions. So as we move on here, let's see, instructions. The entire year's property taxes would show in a separate. Okay, it says here, John tried his hand at day trading for a week. He received a substitute Form 1099-B from his broker because the summary was provided, because the IRS was provided the acquisition date and basis for all trades required. These can be entered as a summary entry into Schedule D, and no Form 8949 needs to be prepared. So do we have a 1099-B form here? That's the dividend form, 1099-S. Summary entry. Okay, so here's the proceeds. So basically, these are all going to be short term because they all happened under a year. And so we can show this AMC Theater. The sales price is going to be $12,800 and the cost basis is $10,496. So you'll be able to see here on Schedule D. Let me find my Schedule D here. The total transactions of 12.8, the cost basis here, 10,496, gives you a short-term capital gain here of $2,304. Okay, guys, moving on. We've got some itemized deductions we're going to look at. Now, know that it gives us some information here. The doctor bills and other medical expenses shows $5,000 for doctor's bills and $1,800 for medical expenses. So we can put that on the itemized deductions form, Schedule A, and the Schedule A will show you. Let me see where Schedule A is here, if we even have one here for him. Schedule 1, Schedule A. So we'll show that $6,800 in medical and expenses. Now, once we total 7.5% of the AGI, we'll then know what amount of this would be deductible. But it looks like, based on the form, that we aren't going over 7.5% of his adjusted gross. Okay. Also, for state or for tax purposes, we see that we can choose to do sales tax or income taxes. So it tells us here the state sales tax is $2,600 and $77, which it says it exceeds the estimated. So we would put the sales tax in here because you can pick either income taxes or sales tax. So here's the 2,677. Then it will tell us the various other taxes. I believe it said he had property taxes of, here, let me move that up. The entire year's property taxes are reflected on John's 1098. So if we look at John's 1098, sorry, oh, here it is. We can see here that his 1098 shows his mortgage interest is 3947 and his property taxes are $12,000. So again, remember that he was reimbursed for $33 from the buyers. So we'll subtract that amount from the real estate taxes here. Then the max you're allowed to take for 24 is the $10,000 limit. So he has maxed that out. Here we put in his mortgage interest of $3,947. Okay, as we go back to the instructions, it shows us that, oh, I wanted to say loan interest, unless he's got a unless he's a sole proprietor and he takes some automobile expenses, that wouldn't be a write-off. Credit card interest isn't a write-off. And then cash contributions here, you see he shows he's paid in $3,200 to the Jonagold Research Center. So we have that listed here in the itemized deductions. Okay. Now, for now, we are not allowed to take income tax prep or any employee expenses. And so that would be the limit of his itemized deductions of 17,147. And that's going to flow back to his itemized deductions here, itemized deductions of 17,147. Okay, it shows from Schedule 1, line 10, we'll also have to look at the various information. Okay, we've got the income from the alimony. I think I put in 57, 5675. I was wrong. It's 5,700. But he looks like he has some rental income. So if we move on to discuss the rental income, one other thing I just want to address real quick. It looks like he paid in some federal estimated taxes on December of 2024 of 5,000. So you'll want to make sure that information is put on the 1040 where you show estimated taxes. This 2024 estimated tax payments of 5,000 would be placed there. As far as the answer sheet here, you should be able to see it right here, estimated tax payments here of 5,000. Okay, guys, moving back to the instructions. John's employer offers a retirement plan, but he doesn't participate. Instead, he made a 7,000 contribution to a Roth. Now, if it was a traditional IRA, we could deduct it. Since it's a Roth contribution, that is not deductible. In terms of the Schedule E, John owns a condo in Seattle where he lived in years ago and he rents now. His rental condo is located at 1012 East Terrace Street, Unit 1204 in Seattle, and it was rented all year to the tenant. He paid $2,000 a month for a 12-month lease. So we will want to show on the Schedule E Here we go. We'll put in the information that shows the address, and we will show it was rented for 365 days. The rents are 2,000 a month or 24,000, but it looks like there is a $300 security deposit that he kept. There were damages, and so he did reimburse. There was a $500 security deposit, but he kept 300 and returned the rest. So we will have to show that $300 of income that he decided to keep due to damages. The rental property has these various expenses. So we'll put in here the Schedule E, the mortgage interest, real estate taxes, insurance, repairs, and homeowners association fees. All of that will come in this form. When you look at the income and you total the expenses, we have a loss on the rental property of $700. Now, that $700 loss flows back to Schedule 1 here. And so when we total the Schedule 1, we have the 5,700 minus the 700, or the $5,000 will flow back to the 1040. Sorry, guys, I'm trying to find this. That will flow back to, oops, I'm going way too far. Will flow back to the 1040. Um, right here. So when we look at his income, we start with the wages of 83.3. We add the dividends of 48.50. We add the capital gains of 20,854. This comes from Schedule D. We add that additional income from Schedule 1. We have total income here of 114,004. We know that the standard deduction was the 17,147. So we should see that his taxable income here is the $96,857. Now, with taxes, that is unique because there are various qualified dividends are taxed differently. Long-term capital gains have a lower tax rate than ordinary income. So basically, in terms of the taxes, you will be able to see that tax rate or the taxes for this particular taxpayer is 14,728. He did have 16,000 withheld, so he is going to receive a refund here of $1,272. I am wondering if I missed anything in here. Let me look back at the rental property. John has health coverage, complete John's federal return, complete Schedule 1, A, B, D, E, qualified dividends, and capital gain worksheet as needed to complete the return. Now the capital gain worksheet, I think we went through that, showing the portion that was long-term and then the portion that was short-term. Normally, yeah, the 89, the Schedule D has income that flows back to it. And basically, the capital assets from the sale of the home will show on the 8949 and then transfer back to the Schedule D. So I believe oh, and then another form that needs to be filled out is the Form 8582. Whenever we're dealing with rental property, it's considered a passive loss. And so the passive loss of $700 can be put against any passive income. In this case, because of his income, he's allowed the whole $700 loss. He's not gone over the $150,000 limit. Um, so he is able to take that entire loss there. Here, this is showing how you calculate the income taxes. So we see what the tax worksheet is. We see the amount that's related to qualified dividends, the Schedule D, and the portion that is for long-term capital gains versus the short-term capital gains. And so basically, you can utilize this form to see what portion of the taxes are based on different tax rates. Now, guys, I'm embarrassed to tell you, but software really makes life a lot easier because you don't have to manually do all this work. But hopefully, this will help you. Um, I will start doing this for each week so you can just kind of work through a problem together. Thanks so much.